Thank you for coming back for this afternoon's sessions. I'm particularly excited about this next one. We will start this afternoon's discussion on financial innovation. Not just tokenization, new rails, and automation, right, which is in the title of this panel, but the process it takes to achieve a global scale of innovation or change. This morning we talked about technology and where we could go. Right now we'll start the conversation of how we get there. Ladies and gentlemen, your moderator, the distinguished Carole House.
So much. Hey everybody, I'm sure you're all extremely excited about this amazing and distinguished group of panelists that I have here with me and talking about some of the, really dissecting the real issues around innovation and what these technologies look like and how we can achieve that change that Jen just spoke about. So far we've talked about domestic and international interoperability. We've talked about what money is going to look like in the future in 2030 and technological transformation, but now we need to get into some of the specifics around these innovations that have arisen to address issues that we see in the current payment system around the 5 key themes of this conference. Privacy, cybersecurity and resilience, financial inclusion, cross-border transferability, and competition and innovation. So in this age of technical innovation that offers so much promise related to all of those themes, the reality is that we haven't really seen that promise fully manifest yet. It's not been fully realized. It's faced challenges with implementation and presented peril in some long understood and observed areas and some kind of new ones as well. So ultimately, we really need to dissect the specifics of these innovations that potentially hold the promise for creating new rails and infrastructure, supporting both financial and non-financial activity at the same time, and that envision to really be the building blocks of the future of digital economies and smart cities. So let's get down to it and talk about what's really going on and why we're here. So first, let me introduce my amazing panelists. So first, next to me, you have David Treat, the Senior Managing Director at Accenture, who has a lot of really great insights that I can't wait for you all to hear about the intersection of things like identity as well as the future of money. Sheila Warren, of course, the CEO of the Crypto Council for Innovation, also long history of the World Economic Forum, and has been a really great voice for what responsible innovation needs to look like in the crypto ecosystem. Of course, Valla Vakili, an institution over at Visa. So he is the SVP and head of insights and innovation at Visa. Can't wait to hear his insights coming from one of the original fintechs in the space. And then, of course, everyone knows Miguel Diaz, head of the Toronto Center at the BIS Innovation Hub, and who's been driving a lot of the incredible work with many of the central banks that are here today. So first, I'm going to open this up to all of you, and I'll start, David, we'll start with you and go down the line. So just a little bit of level setting on like why we're here talking about this. Given your unique vantage points, we have the fintech industry, we have financial services, advocacy, NGO representing many of the central banks and working with them. It would be helpful for the audience to hear your views on why we're talking about this, of like these innovations, why the new rails and automation, and like why we're talking about how we need to achieve this strategic change. So basically, I'll start with you, David, if you can start, and we'll go down the line to introduce the discussion with some of your views.
Excellent, thanks, Carole. I'm going to get some eye rolls from this. Like, let's go, just the basics. I keep reminding myself of the basics of where we are, that really in 75 years of a digital world that has been emerging, of the electronic transmission world that preceded that, and the physical letters that that preceded that for centuries. Tony actually set it up quite well on the previous panel, and along with the other panelists, of we have only lived in a message-based business model forever. Right? And that is the fundamental thing that has changed, is that for the first time ever, we can have a provably unique object in the digital context, meaning more than 3 feet away from my person, that can be provably owned by me, provably transferred to Sheila with certainty, instantly, in an incredibly effective manner. We haven't had that. And so if we focus on, well, what business model does that change, right? I had a client they're not in this room, but they might be listening. I had a client who, who characterized, look, the financial services world is a data reconciliation business that does a bit of banking. And so I thought it was a great quote. The promise now of if we just stay focused on this notion of a provably unique object in the digital world, that provable ownership, that ability to transfer with ease and certainty, we focus on the business model change that comes from it. What we're trying to do is not focus on the qualities or characteristics of the existing solutions that have been thought of, but actually pivoting the conversation to what requirements do we have for exchanging value at a distance further than 3 feet from our person. What requirements do we have? Because the technology is wildly configurable to suit now, and that's the interesting part of the conversation: is what are those requirements? How does it need to work? Who needs to be the operator, administrator, compliance, risk, audit, all of the pieces that wrap around it. I think we get too hung up in evaluating what's happening only in the context of the current solutions or only in the context of the current system.
Sheila, I know you have some thoughts about thinking outside of the current system and what we can do to help consumers. What are your thoughts about why we're here talking about these innovations and the how to achieve this strategic change?
So many thoughts, Carole. I think that we are seeing a time when a lot of our colonial demons are coming home to roost. The roosters are coming home. And I don't think we can have an honest conversation about financial systems without acknowledging the legacy of colonialism, of trauma, that exists at the individual, community, and country level in the systems. And the reality is that our current system works really well for a lot of people. It works not at all for a lot of people, and it works well enough for the majority of people. And I don't think our standards should be well enough. And I think what we're seeing in terms of the revolution that is coming, and I use that word deliberately, that could wind up being political upheaval, look anywhere, right? Or it could wind up being as simple as the recognition that the mechanisms Dave's describing, digital objects, which exist, allow us to imagine a system of value transfer and value exchange that is much more authentically focused on what consumers actually need and want. And I think that fundamental premise is what you're seeing start to expand throughout a variety. It manifests in multiple different ways, in myriad ways. It can manifest in permission systems that exist in existing operating models. It can manifest as brand new systems I am not even qualified or capable of imagining that are going to be ushered in by this new underlying architecture. But all of it comes, I think, from the fundamental recognition that we set up a system, it runs the way it runs, it doesn't work for everybody, and the everybody is getting to be a bigger and more vocal and more powerful group that needs to be heard and acknowledged, and this is one mechanism for doing that.
Valla, I know you have some thoughts. Visa has been driving innovation for decades and on meeting needs that hadn't been met previously. What are your thoughts about why we're here talking about the process and about the specific innovations that are needed for money?
Yeah, so my thoughts are a little bit different. They're a little broader about where we are in the innovation curve right now and what benefits and challenges that brings. So if you look at where we are in the broad scope of digitization, more and more people have access to digital technologies, and it is seeped into the sectors and industries that it was not part of when it was birthed, right? It's not just Silicon Valley anymore. It's every sector, it's every industry, it's government, it's education, it's healthcare, it's widespread. Because more and more of life is mediated by digital technologies, we rely on it to do things it was not designed to do. The internet was not designed to identify who we are. It wasn't designed to move money. It wasn't designed to enable value exchange. It was designed for communications and messaging. So there are some basic holes in the design of the internet in what we use digital technologies to do. Everybody is using them to do new things. It's not possible to have a company, industry, or national strategy that is not digital. And so it's being called on to solve questions around identity, solve questions around money movement, solve questions around value exchange that were not part of the original design. And that's, I think, why you're seeing all the innovation that we're seeing today. That's what makes me excited about what's coming tomorrow, is that these are going to be hard questions to solve, and they're going to need to be solved in many different places. And I think we're just at the beginning of solving those.
I love an implicit callback to that cartoon from the 90s on like no one knows if you're a dog on the internet. So fantastic, really appreciate those insights. Miguel, can you finish kicking us off with this discussion? Why are we here?
I'll take you from the specific to the general and in increasing generality, but let me start with this. I think it's fundamental to discuss that we're living in an exponential evolution of technology era, right? And this implies that the digital realm is touching our everyday lives ever more. And when we thought about financial exclusion in the past, we could thought that it was bad because people would not get access to financial services. But if we think in financial exclusion right now, we can actually keep people out of society. So that is something that modern societies would not want to see. Now, given this situation, we have to see what our financial market infrastructures look like today in terms of the capabilities of processing transactions, in terms of the capability of producing different business cases and functionalities on a production scale that can serve this very big demand that is coming due to this digitalization process. And we can realize immediately that we need new financial market infrastructure. So Tony mentioned it in the last panel, and I think he's right on spot, that we need to rethink how things work in the back end. Now, tokenization is just one way of doing that. And I think it is relevant to study that possibility and to study that realm. But we also need to be aware that building a completely new financial ecosystem based on completely new protocols and systems, it's quite challenging. And it might be the case that we can enhance current financial market infrastructures with new functionalities that are consistent with what the people require for this new digital age. And then just work on top of those, introducing certain compatibilities of the traditional systems with these new functionalities and capabilities. And this is a little bit what we are trying to do at the Innovation Hub. So we of course try to understand tokens, we try to understand what is going on with DLT, which are the actual benefits of this technology, even if they're not that clear to some people like myself. But we also try to explore other technologies. We try to explore how to expand the backend, how to expand the functionalities of existing infrastructures, always considering that moving statu quo from the financial sector, from where we are now to a new system is extremely challenging, and not due to technical restrictions, but due to policy and to politics that move things behind. So we need to take into consideration that when we think about producing this supply to fulfill the demand for the new digital economy.
That tees up a really thoughtful discussion that I think that this panel can have about dispelling myths and misunderstandings. So having discussed what innovators and disruptors are trying to do, let's level set on what actually this technology is, what it means, and dispel some of those myths and misunderstandings we hear across policymakers. So I'm going to start with David and Sheila. So David first. I know you have some feelings about phrases like money is already digital. And can you unpack for us what tokenization really is, why it's different? What does this unlock for us? What does tokenization do uniquely or differently?
Yeah, it is one. How many people face that question, or have to still answer that question of like money is already digital? Yeah, all right. So I see a number of hands. It's one of my least favorite phrases to hear or need to respond to. I don't mind the question, but because it limits the conversation, right? We live in an increasingly digital world, and when we put our human needs at the center of it, we need solutions to be able to help us bring our identity, money, and objects and assets with us from digital experience to experience. We can't do that today. Today, we are constrained to a username and password individual relationship with each service provider in our life, and lo and behold, identity, money, and objects, every business transaction, I would love to hear if somebody can think of one that doesn't, involves identity and money. Most of them also involve an asset or a service, in the digital world. We are innovating against these tracks independently. I will go from here to another conference that's entirely focused on digital identity and verifiable credentials, and it's all based on the same underlying technology of a provably unique object in the digital world. And so we've had a huge focus at Accenture and with our partners over the past year in particular of bringing these innovation waves together to actually put the actual human, whether it's an individual human or groups of humans in a corporation, their needs together to say, look, I need to be able to bring my identity, money, and objects with me from experience to experience across firewalls to get the services and products that I need. I need universal wallet infrastructure to be able to hold that. In the physical world, I have a leather wallet that has a standard card size for things that fit in it. That wallet contains my car key, my building access, my financial credit worthiness on my Visa card. It's got my central bank liabilities in the form of physical cash. I'm the point of integration of all of the various services that I need, and yet I'm not enabled to have anything close to a great experience in the digital environment where I can traverse those experiences. And so when someone says money's already digital, it's limiting the conversation to realize that actually we need to focus on what, we have a digital world. If I pivot the question around, I think the better question is, in the digital world and experiences that we're existing, how could we better enable humans and groups of humans to work with the combination of identity, money, and objects, and lo and behold, the tokenization, that notion of a provably unique object applies as much to my college degree, my car title, my my library card, and those will all be different systems. They'll different architectural choices, and I need something to be that point of integration to then actually be able to innovate a whole new wave of products and services.
Huge implications for the infrastructure, regulatory regimes for financial, and not, man, we've got a lot more to do than just Linden dollars and World of Warcraft gold, I guess. Sheila, your thoughts, you're seeing really interesting use cases related to tokenization. What are your views about the uniqueness of what gets unlocked and what's probably needed to enable that across the systemic level?
Well, I want to piggyback a bit on something that Dave said, which is what he's describing is actually quite radical in its reimagining of how we think about our systems. Right? Putting a user, having a self-hosted, not unhosted, I hate that word, a self-hosted wallet at the center of the architecture is a radical design change. But what it unlocks is extraordinarily powerful, and it is actually how we like to pretend we function today, right? And how an analog world we kind of sort of function-ish, maybe not really, I don't know, right? It doesn't really make any sense. And so I also think there's a demographic shift happening here. So my other pet peeve, which isn't really answering your question, the new buzzword, right? Everyone's like, tokenization of real world assets, that's the thing. If you're doing that, it's great. If you're not doing that, it's terrible. What is a real world asset anymore? My view on that is very different from my 10-year-old's, let me tell you. What she thinks of as a real world asset that has value to her, that she wants to take from experience to experience, is very different from my wallet or my phone or whatever it is that I might actually think of as a real world, my house, whatever it is, right? And we are moving into a world where that transitioning between our online and offline realities, we may not like this as parents, let me tell you, I don't like it as a parent, but it is happening. It's happening at a pace that is ever accelerating. And so the idea that we need to be thinking about designing the experience around that self-hosting conceptually is just, it has to be the sort of starting point of the conversation. And it's really hard, I think, for people to get their heads around what that means because it is, in fact, so radical. And I think you said it so professionally and calmly, but it is a very radical idea. So what do we need to get there? Well, I think it's to Miguel's point. A lot of limitations are not technical. The technology exists, and it's operating in certain parts of the internet today. Operating is kind of, I'll use that word very loosely, right? Well, not well, depends on who you ask. It's really going to involve, I think, reimagining our policy environments, reimagining our business relations, how we're defining customer-business relationships, how we're defining peer-to-peer, who is a peer, in what context, what are we exchanging and when and how, what parameters do we have to have around that. And I think we should get there slowly. This is not change that should happen overnight, but I do think this change is inevitable. I firmly believe that, and I think the sooner that we start having the conversations in this way, with this as a sort of starting point and the foundation, the better off our policy and regulatory environment is going to be around accommodation of this rather than sort of resisting, this sort of, like I say, demographic inevitability.
Yeah, I appreciate you two helping to set the stage for the discussion about like the changes for the future of e-commerce, but then also I'm sure every regulator in the room is thinking like, wow, the regulatory perimeter looks very different potentially in this future ecosystem.
Can I pile on just one thing?
Sure, and then yeah.
Just super quick, but one of my other pet peeve questions that often
Oh,
follows.
I'm glad that I'm hitting all your
yeah.
pet peeves.
And Sheila touched on it, is this notion of like, well, people aren't going to want to self-custody. Like, I totally disagree. I just watched my wife, she's a doctor, she changed hospital systems. She spent a day and a half going through filing cabinets, emails, trying to find all the credentials to recertify herself. Those credentials were issued once. They were issued 20 years ago. They were asking who was the internship director at the University of Pennsylvania back in 2002. They're gone. Like they're not, they retired, and that one of them died. Like the whole we are desperately seeking ways to hold on to the data that's important to us for the context of our lives. I had the same thing with a contractor last weekend. They asked me what paint color the basement was because we had to repaint the wall. I didn't know.
Like that color.
Yeah, like go match it. No, but the notion of I can have a digital twin of my house in token form to which I can aggregate all the data around that paint color was this, and I can now start to really accumulate the interesting information about my life that forms a new platform for products and services. And if you offer to someone a convenient, usable way to collect their identity, money, and objects in a place, we're now in a totally different world that I think we're all craving, actually.
Yeah.
And also to curate it, right? And I'll be quick, just to curate that, because I think what is also unprecedented, the amount of data we generate is mind-blowing. It is mind-blowing, right? And not every, you don't care about all of that data, you care about some of it, and you care about some of it a lot. And the ability to kind of curate that and to say, these are the things, like I can quickly parse, I can quickly find it, I know where it is, and it is mine. I don't have to go through 17,000 layers of, whether it's file cabinets or online junk is even worse, trying to find a photo sometimes, oh my God, it's impossible. And so I think that I agree with you completely. The idea that people would not, almost immediately, you can think of examples like Dave just did here on stage, where of course I would want that. Of course I want that ability, that experience. That is exactly what I've been praying for. We can do it today, we just don't.
Yeah, I get that user convenience and choice, and there's probably a lot of options and different considerations that users will think about in self-custodying money versus credentials versus other objects, like just like in the physical world, right? So I'm curious then on another piece of these false dichotomies, forms of money and payment. I think that this leads in well from the tokenization discussion. So we hear sometimes that there's this dichotomy of it's an either or. This has been discussed earlier today as well, but I'm curious what your thoughts are about your views not only on this false dichotomy of like we've got to pick one or the other, but maybe dig in deeper to specific ways that these different forms interplay with each other. So whether it's CBDCs, whether it's tokenized assets or the infrastructure like identity that supports it, what are your thoughts about the specific roles that private money and public money can play with each other, and how you're seeing use or integration between older and newer rails? Valla, can I start with you?
Sure. Thank you, by the way, David, for reinforcing the absence of identity protocols on the internet and why we're here today. I think these come down to different languages, fundamentally. And the challenge is that, and it's reflected in the room that we see today, is that all of our starting points come with specific languages around how we talk about the problem. If you're in the public sector, maybe in the central bank side, you might be talking about common ledgers. If you're, from our standpoint, payment network, you might be talking about interoperability. What we're both actually talking about is that people and businesses want to transact more easily in different environments. And it's hard to overcome the language barriers between sectors when we're accustomed to one way of working between the private sector and the public sector. Typically, the people in private sector organizations who work with public sector institutions are in one part of the business. They're not really tied to product development. They're not really driving the future roadmap and innovation. And that's what I think that's what this event and events like this, as well as all the collaborations that we're involved with in central banks worldwide, help break down, is really connecting one way of looking at the world, one way of talking about outcomes to another, and then rooting them in real world examples and case studies. So we have done pilots with central banks in Singapore and Hong Kong, Brazil, trying to bridge that gap between what states are looking for, what the private sector is looking for, and not really get hung up on what the technology is or what the specific solution is or what the, what our starting points are, but really trying to root it in what we're trying to accomplish. I think a great example is a project we did last year in Brazil, working together with Microsoft, Consensus, and a startup called AgriToken to look at the needs of farmers in high inflation environments who want to access broader liquidity markets. And what the assets that they have are really their crops. But there's no way to represent the value of their crops outside of their local market and economy. So in this case, tokenization is actually interesting. Tokenization, you can tokenize the crop contracts, you can bring it on chain, you can expose it to a broader pool of investors, you can open up liquidity. And the starting point is not, well, let's go look and see where we can push tokenization into rural agricultural communities. The starting point is really what are these farmers trying to do? What sorts of conditions do they see themselves in? And it blends access to liquidity, which might be something that is more private sector-ish, with challenge in high inflation environments, so something that might be more of a public sector concern. It enables us to work across barriers and really learn what we each value. And that's I think really the only way to get past some of these dichotomies.
Thank you. Miguel, some of your thoughts about these false dichotomies?
So to talk about dichotomies, I think it's important to go back to the basics on what type of asset is doing for the final individual. So if you go to the fully decentralized solutions, this is just a way of substituting or giving trust to individuals when they don't trust the traditional providers, say this a central bank or the financial institutions and so on. But then there are many other implementations in which these token-based solutions are just like a database, and the actual trust structure that needs to underlie this type of technologies is exactly the same as the one that we have now. So think about stable coins and compare a stable coin with an e-money issuer or with a bank. So basically they're taking deposits from the public denominated in M1, which is the prudentially regulated form of money, and they are providing a different representation of exactly the same with a slightly different technology. But in the end, it's not a bearer instrument. You need to have a centralized, not a centralized, but you need to have a database to validate whether this thing has been double spent or not, and so on. So in the end, the liability and the financial trust that you need for these things to actually work and provide the service to societies boils down to the same elements. So when you think about digital M0 in the shape of a CBDC, and you think about what central banks have been doing since the 70s when computers entered the central banks, we already had digital money. Sorry about this element, but we did have digital M0, and we have digital M1. And what we're switching here is that we're modifying one type of database for a new type of database, but the underlying need for trust is still there. One significant change is a fully decentralized solution, and that can provide trust when there is no trust. So think about countries in which you don't have trusted institutions to issue money. Well, it might make sense to rely on that trust on the algorithms and the cryptography, but when you have a trusted entity that can manage a ledger safely, and in which society trusts, it is kind of an overkill to go all the way and use the cryptographic elements to issue this element. So, of course, cryptographic elements and asymmetric cryptography are fundamental for everything to work, but not necessarily in the way of providing the issuance of trust. So we need to think again in terms of what each different type of asset provides to the public. And I think there's a space for every type of asset. So there's a space for virtual assets that are fully decentralized for those individuals that do not trust in anyone. There is a space for digital M1 in the shape of tokens or in the shape of traditional digital M1. And there is also space for digital M0 in the shape of CBDCs, as well as it has been in the past through the provision of digital M0 through RTGSs managed by the central bank. So if you see it from the final financial service or the basic financial service that is being provided, there is not so much new under the sun. And many of the benefits that can be achieved through tokenized solutions can also be achieved through enhancement of the financial market infrastructures that are operated by trusted central entities.
I love this perspective, highlighting that like design choices, ultimately there's positives and negatives, and it really depends very much on how you implement it. There's a variety of options that, depending on how you design it, can bring this. This hits at the final false dichotomy that I'm curious if we could maybe dive a bit into the how here. So it's around these absolutist narratives on innovation. Like on one side, feeling that proponents feel that innovation is good and should be pursued and permitted at all costs with no restrictions or boundaries, threatening the danger of technologies developing with no North Star or guidance or protections for consumers. And then on the other extremist side, we have innovation viewed as exclusively predatory and should be suppressed in favor of long-term incumbents and slow processes that refuse to acknowledge long-term challenges and issues. Most people and policymakers understand that there's a nuance in the middle, but those extreme views are represented in some places inside of the digital currency ecosystem. So on some of the features, because you mentioned decentralization as an example feature, I'll throw it to all of you to pick one of the kind of unique features that are discussed in a lot of these innovations, whether it's decentralization, tokenization, or automation. If you could apply one of those, whichever you like, to one of the key themes that we have, so whether it's cybersecurity and resilience, privacy, inclusion, cross-border transferability, or competition, what concerns you the most related to that innovation? Let's talk about the challenges, and then also what you think needs to be done to achieve systemic change to address the challenges related to those features. Let's give some concrete, like tangible sort of ideas to the how on this point. David, I'll start with you, and then I'll go to Miguel next.
You set a big table there. I'll start. Maybe start with the concept of, in the setup of your question, we do ourselves an enormous disservice in most innovation waves with the language we use. It is woefully inadequate. It is not. I thought your points were spot on, Miguel, but I get a rash when I hear someone tee it up as centralized or decentralized. That misses the point. There are three tiers. I won't get in. This will not be a technical conversation. But there's the wallet interface. There's the user experience. There's there is the ledger construct, and there's the network and the node operators. We should be having a much more elegant, detailed conversation around what are the characteristics of who we want to operate that node network. Lots of choices. It could be a defined group. It could be a defined regulated group. It could be an undefined group. At the next layer, who's providing the wallet infrastructure within which these tokens sit, and what are the characteristics of the services and the security and the privacy constructs that can be imbued into the wallet layer, and then what's the whole notion of what type of ledger? We need to have much more sophisticated conversations that are not binary. It's not permissioned or permissionless. Yeah. It's what are the needs of the system that I'm trying to modernize, with a deep understanding of the multi-stakeholder group, of that, including those that are not participating in our digital world at all. And then this technology is wildly configurable across those architectural levels. It's not binary. So I wish I could offer. I wish we could come up collectively with a new set of language to use. I think we do it implicitly in these conversations, and I think there's a really fantastic conversation that comes out of sessions and meetings like this. But let's not make it binary. The architecture is much more configurable than that. Let's center it around individual needs of individuals or corporations or business ecosystems, in their entirety. And then I'm just a massive proponent of there needs to be an open source foundation to this. The ability to not have umpteen different groups innovating independently, competitively, creating the same thing. There's a foundation layer to this technology space, particularly when we're talking about money as a public good, that should have a collaborative, open source, From a security perspective, and we could, if anyone wants to pull aside and talk about that, I could do that. Jim's here, he could do that. There's a huge advantage to an open source foundation, open standards layer, and then let's define the zone of competition that sits atop that for amazing products and services that that Visa or others would provide. We just need to do a better job, on both fronts. Collaborate where we should be collaborating, not using binary language, and really focusing the areas of competition where it's healthy and valuable.
Miguel, what are your thoughts about an area for concern based on these innovations and the way to achieve the systemic change?
So one thing I loved about this comment is focus on the functionality that is necessary and then optimize for the technology and not the other way around. And I think in many fora, we're doing it the other way around. So we start with a DLT and then we try to figure out how this thing could match a potential use case, as opposed to thinking, how can I make life easier for individuals? And then back engineer the technology that is more efficient in getting that result. That said, I wanted to touch on decentralization, because I think it was quite powerful. So when we see this exponential evolution of technologies and we saw the fintechs coming, that implied contestability in the markets for the existing financial institutions, and that was quite powerful. And banks started to produce new things and new services. But the decentralization revolution, it's absolutely beautiful because it generated contestability for the whole market. And the whole market implies financial institutions, but also authorities. And I think that is quite powerful, because if there is one element that is difficult to change, it's exactly the regulatory regimes and so on. But when you have this alternative option that is fully decentralized, that cannot be regulated unless everyone gets together and puts global frameworks, we need to see these decentralization movements as a floor that provides a basic functionality, so that the regulated entities would need to go above that level so that people could join in, like in a waterbed effect. So it sets the basis for the new evolution of new rules, of new services on the financial sector. So I think that was quite powerful from the decentralized movement. That said, again, I think we need to refocus our discussions on functionality and not necessarily on technology, but we need to be aware that different technologies have different implications and very positive impacts.
I appreciate the comment on it can be easy to write policy. When I was in policy at FinTech, I can write policy all day, but if it's not practically implementable or enforceable, what good is that? And it points to the need and the benefits of public-private partnerships and the fact that regulations don't work if they're not implemented with industry partners. So thank you. Valla, would love your thoughts about some of the concerns related to some of these specific innovations, whether decentralization, tokenization, automation.
Yeah, so I think what they all have in common is that most of the use cases are unknown and will be new and unexpected. And I think as a group of practitioners, we focus a lot on the known by definition, because we're trying to transition how things are to how we think things should be. But that's typically not how innovation works. When all of us got a camera on our phone, we turned the camera on ourselves and took selfies, right? When all of us got maps on our phones, we turned our cars into taxis and our homes into hotels. We do things that are not expected when we get new technologies at scale. And the challenge, I think, for us, for industry and for policymakers, is to be attuned to the unexpected, be instrumented for the unexpected, be open to the unexpected, including that our starting positions might differ from our ending positions. There's been a lot of talk today about, whether or not certain actors are capable of changing and evolving and innovating. And to some degree, the answer implicitly is no at the beginning. But new technologies bring unexpected outcomes. And I think we should be more open-minded, a little bit more humble, and have more openness to the wonder that we will see as these technologies unfold.
Sheila, I would love your thoughts, not just on specific concern, but maybe I know that you feel very strongly about where the US sits internationally. And so if you're okay with that comment about the challenge for the specific innovations tied into your thoughts about driving systemic international change, including with the US, based on your thoughts of where we and other nations sit. Would love your thoughts.
Oh boy, in 3 minutes, where to begin? You know, I think, well, I'll start by just jumping off of Valla's absolutely perfect comment, which I wish we could have closed on. It's very hard to follow that. I think that we all lived here on the stage, and many in the audience, through the heady days of 16 to 17, right, where blockchain was very clearly a hammer going in search of a nail. You know, everything needed to be blockchainified and all of that, and thank goodness we're past that. I do think that period led to some experimentation that was very interesting, that will yield results that I think the world wasn't quite ready for yet. Similar to, I call it like the pets.com era, right, in some ways. That will all come to roost. I think that the reason we've seen so much more innovation in the global south, particularly in parts of ASEAN, is not only did you have a more digitally ready population, younger demographic, that had mobile devices longer, connectivity was not the issue that it is in certain parts of the United States or other places, and you know, because of the reliance on phones. For all those reasons, I think you saw more innovation, but I also think there were just more problems that were suited to this potential solution, right? I think we have to think about scale very differently. I think one thing that sets us back in the US is we have a concept of how a successful business operates, what it looks like, and what the size of it is. We worry a lot about monopolies here, which is not as big of a concern in other parts of the world. It is to some extent, but not the same way that it is in the United States. And I think a lot of this is thinking about scale very differently. Thinking about micro communities is something I talk about a lot. So it may be that the agri-token that you all launched, we did one in India, and that solution would not actually make sense in other states in India, let alone other countries. It just wouldn't make sense because of the environment in which that token was launched, in which that made sense in the context. So taking the baseline of these foundational technologies and saying what we need to be doing is thinking about how do we increase the aperture of innovation to allow innovators to solve problems relevant to them and their communities in ways that might scale in the traditional model, but might be more extensible or might have elements, right, that underlie them that can take in from place to place. The configurability of all of this is something I think is complicated in the US regulatory environment, and ironically, it's actually easier to affect that in parts of the global south that have both tighter and looser regulations, right? Tighter in some ways and looser in some ways, but that really kind of lean into this idea that to be successful, you can just solve an immediate problem in a small localized way, and that is fine.
I think that transitions well. Miguel, if you'd close us out, what are some specific concrete actions or steps that you would propose that jurisdictions, there are so many represented here, that they take related to addressing these innovations, the challenges that they present? What are some concrete measures you would propose?
So I think when you see the innovation environment around the world, you see many quite interesting things, like you have automated market makers, you have embedding of regulation in smart contracts, you have all these very nice bells and whistles, you have Nexus to connect faster payment systems. But when you go back and think what is the infrastructure and what is the ecosystem on which those very beautiful bells and whistles will stand, you see that most of the jurisdictions do not have that basic element. And there is a lot of innovation that is necessary on those basic fundamental building blocks for the digital financial ecosystem to evolve. Touching a little bit on David's point, I think there is a lot or a big opportunity for the world to go into this open source environment, to build these building blocks that can allow different jurisdictions on different levels of development to actually put together the basis on top of which lots of innovation can be built. So I do think that there are some public rails that are necessary in order to foster innovation, in order to foster the private sector to join in and to put all these creative juices to flow. But it is fundamental to work on the building blocks and to provide these building blocks to as many countries as possible. And for that, the open source perspective is quite fundamental, I think.
Specific, nuanced approaches with experimentation, engagement with populations to develop the requirements for technical engineers, creating momentum in innovation, because we're not quite sure what all the right challenges and implementations are that work together. Thank you all so much. If you'll join me in thanking my amazing panel for this great discussion.